just press a button. We're done. Cool. I've got the fancy connecting on the other screen, and then I just need to remember to put myself on mute. And we're done. Right, I think we're done. It looks like it's going fine and dandy. All right, okay. Technology shall not master me. Thank you for your patience, folks. So welcome one, welcome all. In a nice tight community, as always, and thank you once again for being early. If you are new to the session, I'll just introduce myself and then we'll get stuck into it. Hello, Perry. Thanks for your kind words. If you're watching this on the YouTubes, just pop a comment in the chat box. And if there's any stocks, any tickers that you want me to review, just let me know. And as I see them, we'll get to them. Right then. So I have a very brief, I've only a few slides. We'll mainly be on the charts of this, but I'm sometimes asked about like, how do you do all of what you do in such a short space of time? So we're just going to go through how to be a 20-minute trader. It's a very simple process, but really it all comes down to having a very defined plan of action. Otherwise, you'll do what we always end up doing, which is flapping around, looking at chart after chart for 2, 3, 4 hours at a time. And it's a waste of everyone's time. So when you get absolutely granular about what you're doing, when you're doing and why you're doing it, you can be doing it in a very short space of time. Because of this, I often refer to what I'm doing as a production line for swing trading. So as I said earlier, if you are looking for swing trading information in the markets, that's what we're going to talk about. All the things that we do talk about, they can be used with day trading, swing trading, investing. I see this as a dial that you can speed up or slow down your production line. And it can be as simple as just change the time frame, validate the strategy on the time frame that you're using. And if it works, do it. If not, move on and find something else. So trading should be simple and work. I am a huge advocate of simplicity. What my aim is in these sessions and with all my traders is to give you the right tools, the rules, the software, a community to support you, and hopefully a mentor to show you the right way. I never had anyone to ask when I first started out. So in some small way, I try and give back as much as possible on these free open sessions. I talk about what I do as a production line for trading. I'm going to show you my number one strategy, which is a simple rule-based system. It's proven profitable, repeatable, and it takes 20 to 30 minutes a day. And it can be just 2 or 3 times a week. And I appreciate whenever you're learning anything new, it may take you a little bit longer, but it should not be taking you more than 45 minutes to an hour, 2 or 3 times a week. And part of the problem is having that definition. And I'm sure you've all heard of buy the dip or BTFD, insert your own expletives, but it doesn't necessarily mean what you think it means. So I'm going to break that down. I'm going to show you what I mean by it. And the opposite would be sell the rally. But it's essentially to add a layer of clarification. And it can be as simple as adding in an uptrend, buy the dip in an uptrend. If there's no trend, there's no dip. And at the moment, you'll be seeing a lot of this. Oh, it's a dip buying opportunity, dip buying opportunity. It's not, we're in a bear market. We're in a downward movement. There is no dip to buy on the indexes. It's sell the rally in a downtrend, buy the dip in an uptrend. So we have to have definition on what we're doing to be able to do it. So what I'm going to do is going to show you a dip worth buying and a rally worth selling, because predominantly we're in a downward movement. You don't have to take my word for it. I'm going to show you the data, show you the results. At the click of a button, we can pop all the rules into the strategy, also known as the algorithm, and have it plotted back for us. If I just did this thing for the last 20 years, would it have made money? If yes, place the trade. If no, go and find something else that it works on. Again, it's one of those things, all strategies, and they don't work on everything every day, all of the time. And I think we need to come to terms with that. Everything works some of the time, and nothing works all of the time. And as soon as we have that realization, we can start working on the business of trading, because it's an on average profit that we're looking for, and not to be right every time. And again, just let go of the fact that we need to be right on every decision that we make, because no business works that way. Anyway, if you are new to these sessions, hello and welcome. Let me just cast my eye down the who's here. We've got Ian, Brett, Joe, Mike, Perry, Rodrigo, Snoopy, love the name, Steve, hello Steve, another Stephen, Soldierman, Tom, hello Vito, and Zeke. So we've got the usual crowd and plus a few new people. So the way that these sessions go, I'm going to talk at you for an hour. If you want to talk with me, put a comment in the chat box. Again, I have got them on the other monitor, whether you're watching on the YouTubes or if you're watching with me here on Zoom. Just pop a comment, and if it's relevant, I will address it. I'm going to spend 2 minutes just talking about who I am, why you should be listening to me. Short answer is I'm doing it, living the dream. Been doing this full time for 28 years. That's the bottom line, and it's something I'm doing seems to be working. Going to go through the stock market, the indexes, the futures, whatever is tradable. I'm completely agnostic. I get accused of being a stock trader, but I actually started out as a forex trader and did that for 12 years. It sounds like a bad movie. 12 years of forex trader. Anyway, and the narrative that we're talking about already is 20-minute swing trade. It's tied into the rules that we use. I'm going to explain what we do, and they're kind of linked together. And in case you're wondering, there is a commercial intent. You can work more closely with me. I give away as much as possible, wherever possible. If you want to work more closely with me, you can. This is as hard a pitch as you're ever going to see from me. It's an invitation. I don't work with everyone. I don't want to work with everyone. I get the choice to do what I want to do. I am a trader first. I'm an educator second, and I do it because I like doing it. I am the type of person that likes to stop tourists to see if they need directions. It's just in my nature. Some people are like that, and I'm one of those people. I also know that I get results. You don't have to take my word for it. People tell me that they get results in up markets and down markets. This is the recent sell-off. And again, lots of my students all reporting very profitable, successful results. Now, the way you get most value out of these sessions is to interact, like, comment, share, pop a comment. If you've got a ticket that you want to look at, to review, have a second set of eyeballs over, pop it in the chat box. And again, always, I've got a question, you can always pop a comment in the box as well. Again, quick warning before we get going, as you probably already guessed, I am not diamond handing anything. There is no to the moon. I follow a simple set of rules. Because it keeps me sane. First and foremost, I want them for me first. Selfishly, I want them for me first, because what I hate doing, and what I've always hated doing, is sitting there like a mindless zombie, wondering what to do, flicking through chart after chart after chart after chart after chart after chart, sounding like a stuck record, after chart after chart. We've all done it. We've all done it at some point. Maybe you're still doing it right now, but we want to just be able to go, move from where's the trade and start asking ourselves, or basically making a statement of there's the trade. And that's what rules do for me. They allow me to go, there's the trade. And again, it comes with caveats, following rules, following production line. If you imagine the factory scenario, the metaphor that I keep using, it is pretty boring. You are sat there just waiting for things to happen. I also sometimes compare this to farming. You cast your seeds, as it were, and you're basically just waiting for the setups, waiting for results, waiting for opportunities. It is pretty boring, but you know what I like more? I like making money more than trying to think that I'm clever, that I'm smarter than the markets, because I'm not smarter than the markets. I'm just someone who's figured out an edge in the markets, and I get to take advantage of that. Again, I obviously get my own results. I've been doing this long enough. I post. I don't write a newsletter anymore. I used to charge a subscription, used to send out all my alerts with detailed entries, exit stops, and targets. I'd rather just give that away, which is what I do most of the time now. So you get to see what I'm doing, when I'm doing it, why I'm doing it. Sometimes it's before the fact, sometimes it's several weeks before. These are all stocks that I've recently closed. The broker statement is on the screen there. But what makes me happier is seeing my students get results, because that's more important to me these days. I know what I'm capable of, but it's just wonderful to see each and every one of my students get a breakthrough moment and start to see consistent results rather than just one-off results. Anyway, quick, who is me, the weird guy with the funny accent? And that's me right there. I like cake, coffee, walks. I like flamingos. I like spending as little time as possible looking at charts. Quite literally, as I finish this session today, I'm going away for a week. Again, I'm not saying that to brag, but it's hard not to thump my chest and go, look at me, look at my great lifestyle. Again, it wasn't always like that. I've spent the long hours, I've put the hard work in, and looking back on a career, I've realized that there is an easier way. I am going flamingo spotting. I'm sure I'm going to find some on my benches. I've got a weird thing for them. I don't know why. We've all got something. That one's mine. But as I was just suggesting, I've been trading for a long time. Since the 90s, started hand drawing charts. I've been helping good traders become better traders. I'm not a guru. I have not worked in the city. I'm just a regular guy who figured a few things out. And the usual of legal disclaimer: past performance is no guarantee of future performance, etc., etc. Be responsible adults. It's your money. Take responsibility for it is the bottom line. What I can do is show you the benefits of practical in the trenches experience and show you exactly what I'm doing when I'm doing it, and demonstrate that while past performance is no guarantee of future performance, it does sing from the same song sheets. As I've already mentioned, I have cracked the code, and what I aim to do today again is to show you what I'm doing so you can go away and do it for yourself. Again, if you want to work more closely with me, send me a message. It is the fastest way to get where you want to get going to. Lots of people have had success, some famous, some not so famous, just some regular guys, some wonderful people, all of them on the same journey with the same objective to get results from the markets. And that's what I'm just trying to show you here. So you don't have to take my word for it. It's people, regular guys and girls, just getting good results. I'm going to show you, again, my production line process. That's what we're going to do today. It's my number one money-making patterns, one of 6 money-making patterns. And it is part of a larger process. We're going to focus on this mechanical trading system, just a small piece of it, actually. And again, it is part of a larger process. My aim, if you've not already heard this, again, I can see people coming in already, but more people coming in, actually. I want to give you the right tools, the rules. I've got software to assist you, the community here to support you, and be a mentor to show you the right way so that you actually get results. Again, I didn't have anyone to ask when I first started out. I made every mistake that you could make. And my aim is to help you sidestep some of the landmines that you can step on. I do ramble. I do chase squirrels. So just fair last, warning, if you like. I like chasing them. I like the open-mindedness, the childlike mindset, the curiosity mindset. So I will chase squirrels. So just bear with me. There is a point somewhere amongst all my bullshit ramblings. So if you're patient, we will get there together. Anyway, with that said, let's just spend a moment on it. 20-minute trader. And then we'll dig right into the charts. How do you do it? Why do you do it? Why is it important? I want to be efficient with my time. Again, for me personally, this started off as necessity more than anything. I've got Crohn's disease. And if you're not aware of it, it can be quite a debilitating condition. It is a chronic condition. It'll probably kill me someday. I'm not dwelling on it. I'm just trying to illustrate that I get tired and fatigued quite a lot. And when I was diagnosed with it back in 2001, I'd been on and off ill for several years. I'd already been trading, and I had a job in the industry, as it were, as a trader for a prop shop trader, essentially. But when I was diagnosed, I was super tired all the time. I had a 20-minute window to maybe do something. To be fair, I probably had like 1 good hour in the day or every other day. But I had to make money, I had to pay bills, I had to do all the things that you do. And I was housebound for 3 years. So I had to make it work. It was a back against the wall situation. I had to make it work. So that's where this 20-minute thing came from. When you give yourself constraints, you get hyper focused on what needs to be done and to make it work as quickly as possible. So I know it's possible because, again, I did it myself. I took £1,000 because I'm in the UK. I took it to £92,500 in change. I'm doing it in around 20 to 30 minutes a day or every other day around my recovery while I was ill. So I know it's possible to do this in a very small, limited amount of time. These days, it's by choice. I don't want to sit at the computer all day, every day. I want to spend as little time as possible doing it. I want all the activity of active trading, because I am an active trader, but I want to do it passively from a time point of view. So that's what we're going to demonstrate today, how we do it. Again, as I've already said, I don't want to be a mindless zombie trader flicking through chart after chart after chart, wondering where the trade is. No one wants to wonder where that is. And the reality is that you've probably not got definition. And I found myself saying this quite a few times recently, this cursed with knowledge. When you start off your journey, you're reading everything, consuming everything. There's lots of ways to trade. It's a good thing, but it's also a bad thing, and you can be cursed. So basically just pick one thing. This was my first major turning point when I decided to pick one thing. For me, it was geometric shapes. I essentially turned out to be a breakout trader. And I went from this, where's the trade? Because I know the Dow through the GAN through the Elliott wave theory. I know the MACDs, the CCIs, the RSIs, the PPIs. You probably know a lot of tools and methods and methodologies. They all work is all I'm trying to get to. They all work some of the time. They don't work every time. So let go of, as I mentioned earlier, stop saying, where's the trade? Focus on one thing and start saying, there's the trade. That's what we're going to show you. And it's rules that allows me to do this. Very definitive, very specific. Try and make everything that you're doing a binary decision. Has this thing happened? If yes, go to the next checklist. If this thing has happened, go to the next thing. And that's what rules are. And all it is, another way of saying it, is an algorithm. It is an algorithm. Has this thing happened? Yes. Place the trade and walk away. There should be little subjectivity when you start having that criteria. Reasons why you might not do it, but even despite the rules, is lack of confidence. Position size is too big. So we can get the confidence. I can show you the data right now to say, hey, this works. This works on these instruments. And if you're still struggling with it, probably your position size is too big. I have noticed that is the root cause of most things, is people want the lottery ticket win today. They want the one trade that's going to work now. But the reality is we don't know which trade's going to work. All I know is it's going to work on average. So rules allow me to do this. So a very simple process for you to follow is have a mechanical scan, a mechanical assessment that starts before the charts. I'm going to show you some examples. I'm going to show you exactly what I do. I'm going to just give you some inspiration for alternatives. But we want a repeatable, replicatable, I can't think of anything else with our repeatable, replicatable process that allows you to pick opportunities, not pick trade setups, just pick opportunities. Take a big list of stocks to a small list of stocks. And then we want to visually confirm that. For example, I show you how and if you've seen any of my sessions in the past, I show you how to scan for swing trade stocks using a traffic light system. It all starts in the watch list. If all the traffic lights are blue, then go long. If all the traffic lights are red, then go short. And just because we see the indications saying I'm expecting to see a bullish trade, doesn't necessarily mean that there is a bullish trend to trade if you're trend trading. It sounds a really obvious statement, but just confirm what you're seeing. If you're a pattern trader, make sure the pattern's there. Just because you've scanned for it doesn't mean it's there. It's like a trend. Just because you're expecting to see a trend, like there's an average price crossover, just because it's there doesn't mean there's a trend. The average prices in relation to each other are telling you something. It's data, but we still need to have visual confirmation. So make it simple and then trade the next pullback. This was my second game changer. I remember sitting in a Blockbuster Video, if you remember, just to date myself, in one of my earlier jobs on a sunny Sunday morning, reading Jack Schwager on futures. I had many epiphanies that day, and I put the book down. It was like my third read. It's a 1,000-page tomb of a book. And at no point in these textbooks do they say how you actually place trade. Where's my entry? Where's my definable risk? They just say, on the breakouts, go long or short. And that's complete bullshit advice. It really is. So just adding a pullback to whatever you're doing can be a game changer. It keeps the risk small, definable, gives you a definable entry, definable exits. Most of the patterns come with targets, or you can wait for an opposing signal. But like if you're using an indicator, move an average crossover, trade the next pullback. If you're using MACD, trade the next pullback. If you're using overbought, oversold, wait for the pullback. Just layer on something definable, because not everything is tradable all the time, as we've already said, but this is an odds enhancer. If you need to Google it, go and Google it. And let me just quickly draw it. Bullish push. So let's just say that your consolidation is there, price is dingling along there. So all we want is, you want the breakouts of the consolidation. A pullback would be the first bar not to make a new bar high, and that would be the pullback. So your entry would be above the pullback high right there. So as price continues higher, the trade executes, and you've got your definable risk there. That's what I mean by a pullback. Nice and simple. Nice and simple. And then after that, you're going to need trade management. You want consistent position sizing. Again, trying to fill your boots on a one-shot lottery ticket trade is a fool's errand. Don't fall into the trap of trying to get a lottery ticket. It happens often enough for the occasional person that it keeps everyone trying to make it happen every time. I want a business. I want to be doing this. Well, I have been doing this 28 years. I don't want to buy a lottery ticket because, it's millions to one shot that every trade is going to be a lottery ticket win. It doesn't work that way. The business of trading, note the phrasing, the business of trading. We don't in the business of buying lottery tickets. So trade management, keep your risk small. Apply entries, apply stop losses, adhere to your stop losses. If you're using stock, adhere to your risk parameters. And I don't know what's going to happen any more than anyone else tomorrow, the day after next year. I just know that on average, if I apply solid risk controls, if I come out on a planned exit, a stop loss level, or which is predetermined, or a target level that is predetermined, or if it doesn't get to target or it doesn't hit stop loss, but it gives me an exit indication, these are all predetermined, rule defined. I know what I'm doing, when I'm doing, why I'm doing it, and you should do. And this is why I can be a 20-minute trader. So let's put some more meat on the bones. The other thing I'm doing, as I've already said, is I'm not, just go back to this one. I love this slide. I'm not a zombie trader. I'm not flicking through thousands. I mean, how many stocks are there on the universe? It's like 27 bajillion stocks. It's not worth looking at all of them. So the first thing I'm going to do is I'm going to create a master list of stocks, the things that are worth my time. I want liquid stocks that have tight spreads, that are tradable. I can get in and out anytime that I want. I don't have to worry about penny stocks being stopped because they move too much. They're illiquid junk. Yes, you can make the lottery ticket moves, but I want a business. And that's what I'm trying to do. So take a big list of stocks to a small list of stocks. And generally speaking, if it's got 1 million shares traded on average over the last, say, 100 days, it's probably going to be decent. The other thing I like to do is make sure that the stock has options. You can do just the weeklies, which will make that list of stocks even smaller. I've just recently expanded my universe. I'm looking at every stock with options. And then the other thing I can do to make sure that I'm not trading junk is make sure that there's option volume, greater than 1,000 contracts traded. There's liquidity as the point. And one thing that I have noticed is, generally speaking, the more liquidity, the better. If you have an even stricter criteria, you're going to be giving yourself the best opportunities. So, for example, I think my widget has just crashed. Oh, no, there we go. You can say trade 5 million shares and say have 5,000 contracts on average in the options. And that's going to give you some of the best candidates to trade. Again, there's no guarantee. It's not hard and fast. There's always exceptions to every rule. But keeping yourself on the right side of liquidity is usually a good idea. You're going to save yourself a lot of heartache. Again, has anyone ever been in a stock that gets stopped? You've bought a million penny shares thinking it's going to the moon. It goes to the moon and you can't get out. This happened with AMC. The amount of people that phone me up, they're looking at or GameStop. They've got traded GameStop. You remember all the shenanigans? It went literally to the fucking moon. And yet there was plenty of people that just could not get out of the trade. So they ended up giving 30, 40, 50% of some of their potential gains, their potential wins back, because there's no liquidity. So all these big moves look great on paper, but probably not being traded that efficiently or effectively. I'd rather take slow and steady, regular gains, week in, week out, year in, year out. And again, do that for 28 years. You've got a recipe for success. So from that master list, what I then do is I then plug it into my algo. Now, there's plenty of software. I've had mine coded up. I'm not a programmer, so this is accessible to anyone. All my students get a copy of my algorithm. Fancy way of saying rules. That's all that is. But you can use things like TrendSpider, and it's a non-programming. Now, it's obviously going to be a more simplified version of any trade idea that you may have. But you can put, is it Boolean? If this, then that. If this condition happens, take this action, and then tell me what the results would have been. And again, software like TrendSpider will do it browser-based, and you can quite literally put if this, then that, show me what would have happened over the last 1,000 bars. You can validate any trade idea. So I take that master watch list and I filter it through my algorithm so that I've got the best candidates for the way that I want to trade. Some other examples are like to take that master list, like day traders might look at pre-market volume. And we can take a quick look at that in a moment, actually. If you want to do short-term trading, a good indication that there's going to be possible day, opening bell activity, morning trends, morning movements, is to look for pre-market volume. Right now, if you used a filter of saying, okay, if there's 100,000 shares traded in the pre-markets, then there's probably going to be a good trade opportunity for that day. Now, there's no guarantee. I'm not guaranteeing that, but there's at least you can get, like, here's 5 stocks that I need to look at today if I wanted to day trade. And the same thing can be said with swing trading. If you want to swing trade, you can look for relative volume. There's probably something interesting going on when that happens. It's really interesting. So just some ideas. Again, they're not things that I normally do, if I'm going to be honest. Things I have done in the past, you can scan for patterns. One of the things, we were talking just 3 years ago, we could have been looking for dip buying opportunities by looking at the Bollinger Band. When price closes outside the Bollinger Band, that's an opportunity, either a breakout opportunity or a dip buying opportunity. Again, that visual inspection will let you know which one it is. I can look for percentage R, Williams percentage R breakouts. I don't use oscillators in the traditional sense. I use oscillators to find trending opportunities rather than reversal opportunities. So I can look for percentage R breakouts, when price has gone beyond the 30-day range, for example, which is a pretty standard stuff. If you want to look for 90-day breakouts, 90-day ranges, that's all I'm talking about. It's comparable to the 52-week breakouts, 52-week breakout highs, 52-week breakouts. So what I'm talking about is 30-day breakouts and 90-day breakouts in the same context as you might have heard about with a 52-week breakout. Other things that you can look at is if you're finding good, strong trending movements, is to look for a CCI breakout. All CCI is Commodity Channel Index. Again, this comes back to knowing the tool. CCI breakouts, if you get to the classic oversold or overbought indication, that's really indicating a strong move. There's no such thing as overbought. There's no such thing as oversold. What CCI is showing you is we are now, 2 standard deviations from the mean. Like, that's a strong movement. Why would you want to, reverse into a strong movement? It's complete bullshit, if you ask me. Anyway, you can identify breakouts is all I'm trying to say. The point I'm trying to get to is all of these things that you may have heard, that you may be aware of, you're probably either looking at them the wrong way. You've been taught the wrong thing. Overbought, oversold is bullshit. It does not exist. But you can find a way to use the tools as long as you know what you're looking for. So what are you looking for? That's really what it comes down to. All of these tools work. They all work some of the time. They all show you something. It's a statistical measure. And when you get right down to the brass tacks, there's only probably about 7 true indicators out of the thousands of them that are out there. There's only 7 or 8 true indicators, and they're all some variation of the same thing. So, what are you looking for? What do you want? Personally, what I want is this active trading. I want a passive time commitment. Great. So that's going to influence what I'm going to do. I want active trading, passive time commitments. So I don't want to sit there flicking through chart after chart. And this is, again, why it's a 20-minute trading activity for me. I've designed the way that I want to approach trading to get the active swing trading. I also want to be paid every 30, 60, 90 days. Now, if you want to turn the dial and speed things up, you can be, 3, 6, 9 hours, 30, 60, 90 minutes. I want to be paid, again, in 30, 60, 90 days. I want minimal screen time. So all of this is going to influence the way that I approach the charts. It can be done anytime, anywhere, any place, because that's what I want. And if that's what you want, then strap in. Let's go and look at how we actually do that. Whew, we're there. We got to the charts. We're about a minute to go before the market opens. Let me just quickly go to what we can do. Volume today. Just show you one of these things. So volume today, there is CLF, Plug, BAC, Ford, AMD, one of my personal favorites. There's 800,000 shares traded in the pre-market already, almost 1 million shares before the days started. So AMD might be a good candidate for Sling Interesting. It looks like it's going to gap down about $1. So this could be a nice day trade or morning opening bell opportunity. Just keep that in mind. So you can find opportunities when you've got the, again, this is one of my master list of stocks, but you can find good opportunities very, very quickly if you know what you're looking for. So I've got a day trade strategy. It's not a million miles away from the way that I trade swing trading. But if I wanted to focus my attention on 2 or 3 stocks at the opening bell, well, there's 4 or 5 right there. They've all had at least 100,000 shares traded in the pre-market. So maybe I just focus my attention on those 4 for the day. And their universe, there's nothing else in your universe. You're never going to miss something because you're not chasing anything. There's only 4 stocks in your universe today when you've got that thing. Anyway, let's get back to the charts. Where were we? Oh, yeah. So how do I scan for opportunities? Again, you've heard me talk about these things many, many times. That we said before, I'm going to take that master universe of stocks and I'm going to trim it down to the active stocks. Then I'm going to run it through my algorithm. And I'm going to find the best possible candidates based on my algorithm. So for example, if I, let's go to the rules first. Let's explain the rules. So let me just pop that full screen. So what I'm looking at is what I want to be active in my trading because I like being active, but I want to be passive from the point of view of time. So I want to filter out as much noise as possible. So this is the way I do it. I use one indicator 3 times. I've got the 200, I've got the 50 and the 20 period moving average. There is nothing magical, as I've already alluded to, about this combination of events. This allows me a framework to evaluate price. It is also automated, meaning that it will automatically create the line for you. I don't have to sit there and draw trend lines or Dow theory or Gann theory or wonder if I've got the Gann of square of 9 and all the other non. I don't have to do anything that's subjective. All I need to do is go, they're the 3 moving averages, right? Okay. When all 3 moving averages are stacked, 1, 2, 3, I'm going to be biased bullish. Ta-da! Magic secret for the trend. Great. Visually, do we see a trend? Yes. Great. Now we've got that. I'm going to wait for price to come back between or to or between the moving averages. That's it. Back to or between the moving averages. So there's the 50, I'm just going to focus on the 50 and the 200 just for speed and quickness. But we've got 1 touch of the 50, 1 touch of the 50 there, 1 touch of the 50 there, 2 touches there, 1 there, 1 there, 1 there, big 1 there, 1 there, 1 there, and 1 there. So what we're looking at is these are all dip buying opportunities, These are buyable dips. I'm not looking at every down movement, but I am qualifying what I consider to be a buyable dip. And conversely, sellable rally. These are all the times where, you know what, price is at a location that makes sense. So when it gets there, I'm going to sit up and pay attention. I'm going to shortlist all the stocks that have done that. Then I'm going to wait for price to push away. That's the profit potential that I'm looking for, to push away. There's times where it doesn't work. You can see that it pushed away and there's a little dotted line here. This is the algorithm saying, you know what, it didn't work. Didn't work there. I'm going to wait for it to push away. That's my profit potential. Sometimes it doesn't push away far enough or fast enough. There's my loss trade there. So all I'm looking for is a dip buying opportunity. And I'm going to profit as it pushes back away. That's it. That's all I'm doing. Congratulations. You now know what buy the dip looks like. Conversely, sell the rally in a downtrend. There is nothing magical or mystical about what I'm doing. So if I take all of those rules, that back of the envelope concept that you now know, and I say, if I just did that, I can plug that into the algorithm and say, computer, like in Star Trek, computer, show me what would have happened if I'd just done that and nothing else, and didn't worry about the Fed, CPI, PPI, inflation, stagflation, inverted inflation, other things ending in Asian. If I did nothing else other than buy the dip and sell the rally, even without the visual inspection, that's what a positive expectancy strategy looks like. That's what a profitable strategy looks like. There is no thinking involved. There is no subjectivity required. It just is. So now we've got the rules, we've got the confidence to know that it works on this instrument. Now, quick example. Should I trade Pepsi, PEP, Pepsi Cola? So meets the criteria. It's got millions of shares traded, liquid. It's got options. It's got huge dividend payments. But there's the zero line. If I was to swing trade the way that I want to swing trade, would I have made money? No. It's not a stock that behaves favorably for the way that I want to trade. Now, this doesn't mean that it's impossible to swing trade Pepsi. There's plenty of people that do. I have, but it requires subjectivity. I've got to bring something else to the table. I've got to bring the Dow theory, the Gann theory, the Elliott wave, the patterns, the yings, the yangs, the bits and the bobs, the whizzes and the whiz bangs. You got what I'm saying here, folks? I can't just put the trade on and hope that it works out. And notice the wording there. Hope that it works out. Hope that I've picked the right one. The hope that I've picked the right trade entry, because it's subjective. I can't test it. I can't quantify it. Yet, if I went back to the S&P, the index, should I trade the S&P? Yep. Should I trade every single setup? Yep. Should I trade Apple, AAPL? Again, just give you another quick for example. Should Apple be in my universe of stocks? Yeah. That gives me confidence. Now, I don't know if the next trade's going to work or not. And just in the interest, I picked Apple intentionally. Should I trade every setup? Yes. On Apple? Yes. What I'm trying to do is emulate the performance. Here's my last entry. It's not working as expected. Doesn't mean it won't work. Just want to be in the interest of disclosure, say, you know what? It doesn't always work out. I don't know which one's going to work. What I do know is that on average, over multiple occurrences, that there is a positive expectancy. All I want to do is emulate the positive expectancy. Give me a hell yes. This makes sense, folks. Just pop, let me know you're still alive. Let me know you're still alive. Is this making sense? So that's what we're doing. That's why we're doing it. That's the confidence that we're going to do it. Awesome, Zeke. Thanks very much for your comments. Right. How do we do it faster? The chart is intentionally blank. It's intentionally blank. So what I'm going to do then is I'm going to take that master list of stocks. I'm going to run it through the algo and find out which ones look great. And then what I'm going to do is I'm just going to be fair, I honestly just randomly picked the top 25. They were at the top of the list. That's why it's called the top 25. It's not because of anything extra. I mean, I'm doing a few extra things. I'm looking at some of the nerd stats, I've got to be honest. But when all that's done, it's like, okay, these are the top 25 because they're at the top of the list. It's not because it's the top stock. It's just that they're at the top of the list. That's it. Rank them A to Z. All right, these are the top 25. So that's what these are. So now what I'm going to do is I don't know which trade is going to work. I've just showed you Apple. I don't know when it's going to work. I don't know if it's going to work. I just don't know. No one knows. Anyone who tries to tell you any different is telling you nonsense. What I do know, and what I've just shown you, is that on average, it works on this list of stocks. So I'm just trying to emulate the performance. Great. So now what I want to do is the last component to being this 20-minute trader is just to trade the setups when they set up with the frequency that they set up. So now we're more like a farmer. So now it's like, okay, has it set up? Yes or no? Well, let's look at it. So this is the process. This is how we become a 20-minute trader. I'm going to put a break in here. So what I've just done is this traffic light system is showing me. So these two columns here, this is saying, what's the trend? We've already said the average price. Let's just focus on the bull side. The average price, the 200 and the 50 need to be stacked. 50 needs to be above the 200. That's going to give me a bullish bias. That's what that is telling me on the left there. That's saying, okay, these stocks all have a bullish inclination. Cool. These stocks all have a bearish inclination. Now you notice that there's an even split. Oh, there's not quite an even split. There's some bullish, some bearish. We've got a bearish downtrend, heading into recession, all the other nonsense. So there's going to be a natural leaning towards the market direction. The market's leaning towards overly bearish. Great. So they're going to see a little bit more. Usually it's around about 60-40. When the market swings back higher and we go back into a bullish phase, then it'll be flipped the other way. There'll be a 60-40 split the other way. And that's kind of normal. So if you're expecting a 50-50 split, get over it. So what we want to do is we're looking for the bullish trades have a bullish inclination. Great. So what I can then do is we want... if I just draw this for us, we want to see price trending and then retracing between the 50 and the 200. And that's going to be our Bible dip. And then we're going to wait for it. Where's my colors? We're going to wait for price to push back above. And then that's going to give me my Bible dip, a dip buying opportunity and my Bible dip. So when price goes back above the averages, then great, we're going to get involved. And that's what these boxes are showing me. So so that condition is, if I just look at, if I just split this off just for speed, there we go. So that's what these next three boxes are showing me, these next three columns. Where is price in relation to the 200, to the 50 and the 20-period moving average? So if I see blue, so we've got a blue box for the 200, a blue box for the the 50, and a blue box for the 20. So that's the 20, 50, and the 200. So that's what we're seeing over there. So we've got blue, UNH, blue. So that means that it had, well, previously it has dipped, but it's now rallying back above the average. So they're all blue. So it's actually, change colors. It's actually above the 20, the 50, and the 200. So it's not only been in a dip buying opportunity, but it's now rallying away. Should we go and take a look at it so you can see what I mean? So I've got so we're expecting to see a trend, bullish trend. It's above the 200. It's above the 50. It's above the 20. It has been dipping. I'm now looking for it to start rallying in an uptrend. That's how I'm going to profit. Drum roll, folks. That's the only stock I needed to look at yesterday, or to be fair, last week. It's the only stock that I need to look at for a bullish trade today. Great. I'm expecting to see a trend. I see a trend. I'm expecting to see price above the 200, the 50, the 20. They're all stacked. Prices above all three moving averages. Great. There's the pullback that we just mentioned. Push, pullback, waiting to see price move higher. Just literally put the trade on. That's how we can be. This takes longer to explain than to actually do. Buy the dip in an uptrend. Great. That's what we do. Buy the dip in an uptrend. You've got price above the moving averages there, stacked there. You've got you've got a losing trade there. That one would have lost you money. That one there. That's what these little blue and arrow triangles are showing. That's what the little dotted line. That's the algo saying, plotting the historical performance. Plotting the historical performance. That one would have lost you money. This one would have made you money. So 1, 2, 3, 4, 5, 6 trades in the last 8 months or last 12 months. 6 trades in the last 12 months. 1 out of 6 seems like a good success rate. What do you think? Do the kids still do a mic drop? Is that a thing? What about a rally and a downtrend? So now I've got several bear stocks. So what I'm going to do is I'm going to rank and sort. Again, just so I know where let's try that one more time. I'm going to rank and sort all the stocks relative to which ones are rallying in a downtrend and which ones are already trending. So all I'm doing is clicking a button like we would do in a spreadsheet. I'm just grouping them all together. These are all the stocks that are, so right here, these are all the stocks that are bear, red. It's just the opposite. Go and take a look at triple M, MMM. I'm already in this one. Triple M, MMM. No one wants Scotch. Was it sticky notes or Scotch tape? Or do they do both? I can't remember. Sell the rally in a downtrend. You've got to add the qualifier. No trend, no friend. Oh dear, oh dear. I think the cough meds, I've got a little bit of a chesty cough and a head cold. I think the cough medicine's just kicked in. It's apple juice, honest. Quick drink. Folks, if this is brand new to you, Mark, Mike, Loden, Snoopy, let me know. Vito, I know you're an old hand at this, but some of the new guys and girls, is this landing? Is this making sense? It is no more complicated than this. It boggles my mind, the complexity, and I've done this, the complexity with which we can make this. I knew a guy once, thanks Snoopy, to choke me. I knew a guy once, I still know him, he's a great dude, but he is super into his fractals, his butterfly patterns, the percentages, the Fibonacci's. You know what? It fascinates me too. There's some amazingly exotic fractal patterns. There's no other way of describing it. It could be a Gartley pattern. It could be a butterfly pattern. It could be a crab pattern. And there's some really intricate ways of trading that require measuring Fibonacci retracements and percentage this and extensions of that. And then if we hop, skip, and a jump, and we all put our heads together and we all wish upon a star, and then suddenly you've just been, and bunny fingers behind the camera, analyzing the charts for 3 hours. And you've just missed the other 50 opportunities. Like, here's all the opportunities. So all I want to do is farm. Am I short on Citigroup, FedEx, JWM, Marriott Hotel? I'm not in Marriott, actually, if I'm going to be honest. Triple M, yes. MT, yes. RCL, I've just closed RCL. We've been speaking about this in real time. Sell the rally in a downtrend. There it is right there. We've been following this all year in real time. Reversal off the range high. Sell pushes away from the averages. Averages are stacked. Get in the trade. We've got a breakout trade, still stacked. Sell the rally. Trade the pullbacks in a downtrend. There is nothing complex about this. You've just got to have the balls, or lady balls for that matter, to go and do it. Just put the damn trade on. Buy the dip, sell the rally. This is how we do it. This is how I do it. I've been trading some variation of this for the last 28 years. Full time for the last 21 years, I'm going to say. When did I go full time? 2000, I landed a job on a prop shop, middle of the year. So yeah, almost 22 years. Some variation of trading the trend. This works on all time frames. Does it work on 60-minute chart? Yeah. Well, you know what? We can go and validate it. Got an algorithm, click the button, test it on different time frames. Don't just trade a 2-minute chart because you saw someone online trading a 2-minute chart, because they're having their success. Another way of thinking about being a 20-minute trader is, like, if you want to day trade, I'm not shy of day trading. I just don't want to do it. I did it for 12 years. I just can't be arsed with it most of the time. It's not that it doesn't work. It's just, can you make it work? Do you have the time to day trade? Because you've got to commit yourself to at least an hour at the opening bell and probably most of the morning, looking at least one thing, and maybe, as we looked at earlier, 4 or 5 things. Do you have time to do it? If the answer is no, then why are you trying to day trade? We need to back into these things. You'll notice when we went through my list of requirements, I feel like I'm in Harry Potter now, the room of requirements for traders. I am such a Harry Potter nerd. Don't tell anyone. It's a secret. It's out there now. The world knows. My requirements for trading, active, paid in. I've got a requirement for my average time in trade. I want minimal screens. There is nothing about money. There is nothing about, I want to be a day trader. I want to be I just want to profit from swings in price. Occasionally, that is day trading. Occasionally, it's an overnight swing trade. Occasionally, most of the time, it's paid every 30, 60, 90 days. I only day trade when I'm like the last 3-4 weeks, I've been doing a bit more day trading. Why? Because I've been at the desk. I've just recorded a brand new 59 video program with the latest version of everything that we're doing. I've just been recording it. So I've been at the desk. So because I'm at the desk, I've been doing a little bit of day trading. I've been paid at the end of 60 minutes, doing exactly the same thing on a 2-minute chart. Am I going to carry on doing it? No, because I don't want to do it. And I'm going to spend, like next week, I'm going to be away from the computer. So what I'm trying to get to is, think backwards when you're thinking about, okay, well, what's your version of 20-minute trading? What's your version of how you can make it work? So you want to back in, like, what do you want? I want low blood pressure even. I want low blood pressure. I want calm. I want to be collected. I don't want to be stressing. I don't want to be frustrated about shit. Will the markets be up today, down today? The market's crashing. Oh shit, we're off 4%. It's rallying one day, crashing the next. I don't want that in my life. I mentioned right at the top of the session, I've got Crohn's disease. I'm really sensitive to those things. I want a peaceful life. I want stress-free. I want to work out in the mornings. I want to put a few trades on in the afternoon. I then want to like meditate in the evening. I like reading books. I just want a chill life. That's my idea. Whatever your version of that is, that's what I'm looking for. So we want to back into it. Okay, well, how can I get everything I want from the markets and still have a life that I love? That's what I'm trying to get to. That's hopefully what I'm trying to illustrate. Whatever your version of that is awesome. Let me finish thought. I told you we were going to chase squirrels, folks, and we're chasing them for sure. So we've got, the final part that makes this work, and I'm not sure if it was clear when I went through. Let me just make the chart. Chart is intentionally blank. So these 25 stocks here, that's my universe. They're the top 25. I don't know which one's going to work. I just know that they work on average. That means that I've got to take every trade with the frequency that they set up so that I can emulate the performance that I'm expecting. Because just like any other business is an on average performance. If I had a shop on the high streets, I wouldn't expect a customer to come in and buy one of everything in every size every day for the rest of their lives. It's a lottery ticket. It's happened once. It probably will happen again in the future. But expecting it to happen every day, you would be laughed at. And as soon as we step into the world of trading, that unrealistic expectation is the norm. And you've got to think, okay, maybe that diamond hand nonsense on the forums is a load of nonsense. It's a business. So the way that this works is I've got a number of bullish trades. So how do I not stress? And a number of bearish trades. Excuse my doctor's handwriting. I was training to be a doctor at one point, and the only thing that I learned was how to write, or not, as the case may be. But I want to be bullish, I don't want to be bearish. So there is a balance of bullish trades and bearish trades, and some of them are just going to be they're going to be resting. Let's just call it resting. Then between trades or between states, essentially. So some of them are going to be resting, and there's usually a 60-40 split of open bullish and bearish trades. It depends on which way the market's going. And if I'm looking at 25 stocks, there is approximately 10 bullish, 10 bearish, and there's going to be 5 in the middle. And as we've already established, there's a little bit of a bullish to bearish bias. So at the moment, it's probably about 12 to 14 and 6 to 8 on the bull side, about 12 to 14 on the bear side, just because there's a natural bias at the moment because of what we're seeing. So what this means is, if I just tidy my chicken scratch handwriting up. So when the bullish trades move higher with the up movements in the markets, and the bearish trades move lower with the downswings in the markets. So I've got a balance of the trades that should be open in my portfolio. Some of them are going to be bullish, some of them are going to be bearish. When the market swings up, the bullish trades theoretically should profit. When the market swings down, the bearish trade should profit on the downward movements. Also, you've got built-in crash protection. If the market was to, excuse my clatching, it's Terry Pratchett reference, if the market shit the bed, you've got crash protection. You will profit from a downward movement in the markets, big, small, fast, and furious. You've got that built-in protection right there because there's bearish trades on and open every time. And and I never thought I'd catch myself saying it, but if the Fed decides to print money and we again, and we see the markets crash, I'm gagging on the phrase already, and we see the markets crash upwards, then you'll be on it. You'll be on you won't be on everything. I'm not going to lie to you. You'll be on something is all that matters. So this is what allows me to sleep at night. It doesn't matter if the market goes up, it goes down. I can take a day off. I can take a week off. It doesn't matter. in the big scheme of things, you've got exposure to movements on the bullish side of the ledger and the bearish side of the ledger. Let's check out UNH. I only put this on yesterday. I was a little bit late to the party. This for me went on yesterday. Again, I was a little bit late. The algorithm fired it off last week. Let me zoom in. This is what the algorithm looks like. It's got a nice little horizontal line to say, hey, there's the trade right there. There's the trade. There's a little tiny pullback just there. I know I said that was that one. Little tiny pullback. There's the algo stop loss. I don't use stop losses. There's a question about them. Mark, I've seen your comments. I'll respond to that in just a minute. I use options as an alternative to trading stock. Where could this get to? Well, the algo says $656. So what we're looking for is the trades on there. I'm expecting it to get to there because that's what the data suggests. On average, most of the time, it won't always get there. For example, when it goes back between the averages, go to cash. When it goes away, take profit. Occasionally, we're going to get these big ones. We're getting the big targets at the moment. Huge move. I think I'd be happy with, what is it, $156 move on a $600. You know, if you just did one share of that, you don't have to do it with a big account. Anyway, squirrel. I use options as an alternative to trading with stock. So that means that I don't have the capital intensity of buying stock. This is a more expensive option. In fact, I think this is the after money option for this is $30, so $3,000 options. Don't let that put you off. You can use a debit spread if you want. Now, if you want to trade with stock, you can do. If you only want to risk, if you want to risk that much, your risk control is between those two levels right there. And maybe you can trade one share, maybe you can trade 5 shares, maybe you can trade 10 shares. That's great. Whatever the number is, you work out your position size. I only want to risk $300, $500, $5,000, whatever your number is on this trade opportunity. And you trade the risks divided into the share price will give you the number of shares. I do the same thing with stock options. So I'm going to trade my risk profile with stock options as an alternative trading stock. So I don't have the capital intensity because there's no margin requirements and I'll benefit from the movement. So there's a couple of ways of trading. If you want to trade it with, I appreciate there's a few UK peeps here today. If you want to trade it with spread betting, you can do that as well. If you're outside the US, you can use CFDs. So you can sidestep the pattern day trader rule if you want to day trade. But nonetheless, most time I am swing trading. So I just catching up with all the questions, just kind of rapid fired answered most of them there. Let me just catch up with the questions. All right. Mark's just commenting on trying day trading with a prop firm in New York. It's very nerve wracking. Yeah, I think a lot of the time, Mark, just coming back to some of the earlier comments, certainly the first 12 years of my career, I was mostly day trading and short-term swing trading. So 1 to 3 days, essentially. And I had that nervous reaction as well. And I think looking back on it, compared to what I do now, which is not too far away from what I was doing then, it's just the main difference is I've got absolute clarity on definition on what I'm doing, when I'm doing it, and on what I'm doing it with. Whereas back then, there was a little bit of, well, I'm doing something similar to right now, but I still feel like I'm throwing spaghetti at the wall. And I think when you've got clarity, absolute definition on what you're doing, you'll start to have a lesser emotional reaction. And this is the closest I'm going to get to bead shaking and tree hugging. So, bear with me. But when you've got that definition on what you're doing, you've got the confidence. You've got the next part of it is you've got the confidence of applying a rule-based approach on a group of instruments that make sense. Why? Because you, at the click of a button, you can go, does the way that I want to trade, is it favorable on this stock? So this is UNH. I've got a positive expectancy on UNH. Great. I should be trading UNH. Perfect. Now what we want to do is we want to take every setup because I don't know which one of those are going to work. So I've got to trade it with the frequency that they set up, trade a portfolio. My universe is 20, in this illustration, my universe is 25 stocks. Nothing more, nothing less. It's the Goldilocks number. Just right. And I'm just going to farm the setups. That's it. That's all we've got to do. You'll never miss out because you'll always be on something. If the market crashes, it'll be to your benefits. If the market, well, if it crashes upwards because the Fed decides to print more money or whatever bullshit reason we find this week for the market to rally 6% in a day, you'll be on something. So you'll never worry about what the markets are doing ever again. And if you trade with options, the way that I suggest to most of my students, then there's less capital requirements. You can have a 25, 50, 100 stock portfolio if you want. Like for me personally, I'm increasing my trade frequency. I want to go from a 50 stock universe. So I'll have probably about 25, 30 stocks. I've been quite relaxed in this last year. I want to press the accelerator. I've got the means, the ability, I've got the knowledge and the confidence, and I want to have a 150 stock universe. That'll probably give me a 75 stock portfolio. I'll probably have about 75 positions on at any one time. That's what I want to do because I want to press the accelerator. Now, if you're not there yet, that's cool. Stick with 25. If you're not there yet, stick with one instrument. Start with one. Make it work on one thing. And you'll see the profit. You'll see the results. You'll build your confidence. You'll build your account. Again, I started trading IBEX futures on, I don't know why, but 7-minute charts. It made sense. Don't roll your eyes at me. It made sense at the time. IBEX futures is like the Spanish Dow Jones. It's the index for Spain. 7-minute charts. Again, I don't know why. It made sense. At the time, at least I think it did. And it was some variation of this. It was basically when prices above the 100-period moving average, trade the next pullback. That was literally it. A little bit looser. I took £1,000 to 92,500 in change in 8 months, trading one instrument for around about an hour a day or every other day. I would trade the opening bell. I'd be done, by my lunchtime, 9 till 12. I'd be sat there. Just chilling, put the trade on, and then chill out a bit more. And that was it. That was my day. I did that for 8 months. And that was when I knew I had something. So it is possible to have good success in a very short space of time. The only question is like, what do you want? What time do you have available to do the active trading back into it? There's so many ways of trading. I said this in my Slack community yesterday. It's the curse of knowledge. When you know lots of different ways to trade, you want to trade them all. And that in itself is a problem. You're kind of like juggling cats, aren't you? It's difficult. So just pick one thing. Pick one thing because it all works some of the time. Okay, Rodrigo, I'm over a little bit in time. Thank you for the nudge. Let's get back to slides. Enjoy the rest of your day, Rodrigo. Have a great weekend. I'm not here next week. Yes, you're absolutely right. I just catched up on your comment, Mark. There's very little time for analysis. I don't want to do the analysis. I don't want to spend 20 minutes drawing trend lines. It just doesn't make sense for me. Anyway, before we sign off, what was your biggest takeaway? I think there's a few ahas here. These are all from last week. So what was your biggest takeaway? Let me know where the aha landed. Was there something that's caught your attention? And while I'm doing that, just respond to Mark's comments. Yeah, Mark's just saying there's not much time for chart analysis when day trading. It's absolutely right. The way I used to describe it is you've got less thinking time. Yeah, you've got less thinking time. If you can think fast, then lower time frames are possible. Let's just leave it at that. But yeah, you've got to know what you're doing. You've really got to, when the trade sets up, put it on. You can't hesitate. You leave it 2 minutes, the trade can quite literally be gone. Some of the day trades that I do using the same process at the opening bell, they're done in, but they're done in 20 minutes. The trade, it's waiting for the setup, waiting for the indications. And the trade can be as little as 6-12 minutes. It's a very fast process. Right. Okay. So Snoopy, is that a nickname or is that? I don't mean to offend you. Is that a nickname or is that your actual name, Snoopy? Snoopy Borrell. Cool name, dude. Whatever. Nickname. Okay. Cool. Zeke. Thank you for the support. It's easy when you know how. And you know how, don't you, Zeke? Zeke's just commenting. Oh, just waiting for my... I've got the spinning Mac wheel of death. Oh, something snagged. There we go. Easy when you know how, and you've obviously clarified. Zeke's one of my insiders. Thank you very much for your kind words. 28 years. Thank you very much. It's only, everything's easy with hindsight. It really is. And I'm trying to like enlighten every trader one at a time. I'm only joking to you, I'm pulling your leg. It's easy with hindsight because everything's easy with hindsight. Hopefully you don't have to go through the gauntlet that I went through. I literally learned trial of fire. I wouldn't recommend it to anyone, although sometimes that, I don't think I'd be the trader I would be if I hadn't have done it trial by fire, but I wouldn't recommend doing it to anyone because it is quite literally the hardest way to do anything is to learn on the job. At the same time, it's the most rewarding way to do something because on the assumption that you learn the lessons that you're being taught along the way. Snoopy, I did. I was 12 years a Forex trader. I started off with IBEX futures, did that for the first 8 months, and then went alongside it. I was doing currency, so I was doing Forex. So all of these things that I've explained to you today, they all started out on 15-minute charts on the pound, the euro, Japanese yen, pound yen, euro yen. They were pretty much the top 4-6 cross rates that I would trade. So it all started there. I had a small fund as well with around 10 million under management in Forex, 2006, 7, and then 8. And then I wrapped it up after the crash because I had more money than cents at the time. The fund, I've got to admit, the fund, why was the fund wrapped up? Quick private message. It was a bad business arrangement. So it was nothing to do with the fund's success or failure. It's just a bad business deal. It really put me off doing the fund thing. At the time, it seemed like a great thing to do because it was like you can, another string to the bow, as it were. But I don't know, it's just such a frustration. I mean, I manage a few accounts these days, but I don't do anything at the fund level anymore. And last comment, and then we'll wrap it up, put a little bit of a bow around it and call it a session, and then just in time for ice cream. So Perry's saying, can't manage trades using too much analysis. Yeah, I mean, if you try and do this at scale, I want to do things at scale. I think that just to steal from the world of business again, you are never going to get rich trading one at a time. You are never going to get rich trading one. I'm going to say it one more time. You will never get rich trading one at a time. The way that the funds, the banks, the hedge funds, the institutions, the way that they make money is with a portfolio. You've got to trade multiple currencies, multiple iterations, multiple strategies. So when I was doing I used to do a live trade room back in 2004, and we'd have hundreds of people log on and watch me trade. I traded 4 cross rates currency pairs at the time. But I traded 6 strategies. So that's just another way of trading multiple occurrences. So 6 strategies on 4 to 6 instruments, currency cross rates. You've suddenly got multiple occurrences. So it's it's something that I've looked into. You've got to have a portfolio style approach. Because, again, one more time, one at a time is not going to make you a lot of money in a short space of time. And what we can do is, because of the way that the markets have changed, using options, you can, even with a small account or a large account, trade in the same approach, the same methodology, this portfolio styled approach. With modest risks parameters, your individual risk parameter. You don't have to be forced to do a huge position size, which is kind of comes with the territory of managing funds and managing accounts. Do I want to trade funded accounts, like me funding them, or someone else's funding? I've looked into it. It's one of those things that I like dancing by my own tune. If you can expand on that comment, or if you want to ask privately, Snoopy, I'll be happy to try and give you a better answer than the one I've just done. I'm open to it, broadly speaking. Right, let's do it. As always, thank you for your time. Thank you for your attention. we've all got things to do with our lives, our time. I've certainly enjoyed today's session, but I just want to thank you and just end with some gratitude because, again, you decided to spend some of your precious time, the only thing that we can never get back, with me here today. So thank you from the bottom of my heart for deciding to spend it with me. If there's one thing that I would ask everyone to do, is to do it, to put it into action, to take one thing, all of the things that I've mentioned here today, and just do it. Just put it into action. I know what I do works. I've demonstrated it to you. I've given it as much away as possible. There's a few caveats and there's a few more specifics that I just don't have time to go into in the sessions that we have. So if you do want to work more closely with me, you can do. I am taking a week off, but I should be accessible via email. Just hit reply on any of the emails you get from me, and we can make it happen, and we can certainly figure it out. My objective, as always, is to give the right tools to get a meowing. I know, a meowing cat in the background. What's up, dude? I want to give you the right tools, the rules, the software, community, a mentor. I never had any of this when I started. I made every mistake that you could make. And Dylan, my cat, is... you want some attention, don't you? You want some love? Right, I completely distracted and derailed myself. Folks, have a great time. Have a great weekend. My immediate future, I'm not just saying it this time because usually I say it as a joke, but I have a box of ice creams. I've got those fancy ones with the Magnum with the nuts in. I am looking forward to a celebratory choc ice. Maybe a glass of cheeky apple juice, not really apple juice. It's, bear in mind, it's the UK. The sun's over the yard arm here, folks. I can do what I want. My weekend has officially started. If you need me, you know where I am. Hit reply on any of the emails. I have a community of wonderful traders. If you want to come and join me and my meowing cats, just click on, again, the links are in the emails. So come and join the community, come and join the chat. Is the quickest way to get in touch with me. Just click on my name, send me a direct message, or you can do it the new old-fashioned way via email, and I'll respond as soon as I see it. Well, that said, let's do it. Let's pull the pin, throw the grenades, and run for cover. Have a great weekend, folks. Enjoy enjoy your weekend. I'm on a week off. I'll see you in 2 weeks' time. Thank you very much.